Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning, but the cues coming out of global markets are fairly negative. GIFT Nifty hinting at a start below that 19,300 mark. So let's hope that it doesn't really turn out to be a freaky Friday for the markets. But of course, lots of stocks to watch out for in trade, and of course, all your stock-related queries we will be taking up on the show. So then send them in to us on our YouTube feed, and we will have them addressed. But before we do all that, as usual, let's take a look at the top stories at this hour. Stocks sell off on Wall Street with the Dow clocking its worst day since March. In fact, Nasdaq was the worst loser in the overnight session. Investors now look ahead to Fed Chair Jerome Powell's speech at the Jackson Hole Economic Summit later today, and that will be providing some clues as to what the Fed plans to do in the monetary policy going forward. Asian markets trade with cuts following a weak handover from Wall Street. The GIFT Nifty implying a lower start for the Indian markets. In fact, it has slipped below that 19,300 mark as well. Among stocks in the spotlight today, Paytm likely to see a block deal with promoter and Fin looking to sell nearly 3.6% stake via a block deal. That's according to sources. Coforge to be in focus as marquee names pick up stake in the company. And of course, watch out for Aurobindo. Reports suggest that it may be looking to sell its injectables unit once again. And MPC minutes show members are prepared to look through first round of food inflation. However, they will keep an eye out to see if it persists and leads to higher wages. The minutes also show that RBI is determined to squeeze out liquidity. Bond dealers fear that CRR hikes may continue. Well, on that note, let's get on board our first guest for today, to know about markets and what the investment strategy should be for investors in a choppy market. Joining us is Deepak Ramaraju, who's a senior fund manager at Shriram AMC. Good morning, Deepak. Great to have you on the show. I want to first get in your thoughts on the markets, given the fact that, we have been stuck in a range, struggling to, go back to levels of 19,500 or thereabouts. We have been consolidating, so to say, for the last 1 month or so, because you have factors like dollar index, surging, and crude, of course, back above that $80 mark and around that $84 mark now. So negatives for the Indian market. So in this scenario, what do you think the next trigger for the markets will be here on?
First of all, thank you for hosting me. Yes, you said the markets are in a range because we are consolidating a bit because the markets had a significant rally in the last few months, and then we're seeing kind of markets consolidating in a range because it's much ahead of the earnings. So one, the major trigger is to the corporate earnings has to come up. That will be the one. And we also know that the corporate earnings will be a bit sluggish the next couple of quarters because we know the elevated rate hikes that has happened will actually impact the earnings to a certain extent. So it's not going to impact, it's not going to be the similar kind of a story for what it used to be earlier. So you can see some kind of sluggishness in the EPS growth. So last quarter, we saw some 14% growth on the EPS. So you can expect the EPS growth to be around 10 to 12%. So a little bit of sluggishness can happen in the earnings. So the major trigger right now for the market, what the market's expecting is kind of clarity on the interest rate hike cycles. That's the most important thing. So what markets are going to react more positively when once they get a clarity on the inflation data coming down, and then the inflation remaining in a stable state, and that will give a sentiment booster for the markets. That is one. Second thing is the markets also looking forward for the central banks to manage liquidity in a better way, so that it's not too short at any point of time, and at the same time it's not also too tight enough, so that the markets also cannot be kind of going to a breather crunch, basically. So that's where the markets will be looking at. So more clarity on inflation is what markets will be looking at, because that will give the central bank the cushion to take a decision whether to cut the interest rates or to hold the interest rates further, so that they may not take a stance of increasing the interest rates further. That's the most important thing for the markets right now.
Right, the clarity on interest rates and inflation. Of course, we'll also be watching out for Jerome Powell's speech later tonight. He will be providing clues as to what the US Fed plans to do here on. But, in these volatile times, Deepak, I want to get in your thoughts as to what should be an ideal portfolio mix be at the current juncture, to ensure that you get a superior risk-adjusted returns in inflationary times.
So if you look at most sectors have actually, some of the sectors already been elevated. So we need to be very careful when picking the right kind of stocks when we take into some sector allocations. So sectors like what markets are looking at is the growth in EPS. So that's the most important thing. So we all know that most frontline stocks will deliver EPS growth, but the most significant growth is what is going to come from where the clarity on order books is there. So that's why you look at stocks like your railways or power sector, or for that matter, the capital goods. These sectors have been re-rating because the EPS growth is more significantly seen there. The amount of EPS growth expected from these sectors are going to be much more than what the frontline banks or the large cap companies are going to be providing. So that's where you look at the mid caps and small caps are also rallying based on that. And given that the valuation also comfort is there, so one can actually hide still little bit more headroom is there in the bit of small cap and mid cap given the valuations. Almost mid cap is almost close to large cap valuations, but the small cap headroom a little bit is there available on the small caps to a certain extent. So to that extent, some people can hide into that to some more extent. And from a sector allocation point of view, still the banking little bit some headrooms are there because we are seeing kind of NIMs contracting, and then that is already behind us in this quarter. So we may not expect a significant contraction in NIM going ahead. That is one. So you can expect the banking to continue to deliver on phenomenal numbers because the NPA recovery cycle is also going to be strong, and we're not going to see some major delinquencies coming from the banking space. IT is a contra bet. Again, it's too early to take any bets on IT because the clarity is still expected from the US side on the spending, on the IT spending. So that's a bit on the slower end. So it would take much more time for IT to recover marginally. So capital goods, railways, defense, these are the places where the earnings story is being quite strong because the order books have been quite robust. But having said that, the execution risk is also there for these companies. So these companies have to execute it on time to meet the delivery on the numbers so that the EPS growth is going to be there. So if that's not there, then the sectors can be a bit risky. To staying invested in these sectors can also become risky because of the execution risk. So it's all behind on about execution right now. Auto, we have seen kind of the valuations are a bit elevated, but having said that, markets are looking at more to do with the new kind of offerings that is going to come up in the street and the festival demand that's going to be there in the next couple of months. So the sales numbers has to kind of stand up for the valuations to match there. So that's what the auto. So one can be comfortably looking at diversifying their allocations right now than going on any sector specific, so that you have kind of covered stories basically from banking, little bit capital goods, defense, railways, and as well as a little bit on the power side, and to certain other contra bets on IT. So basically, some can be on looking at a contra bets, especially in the mid cap and small cap IT. Those are still relatively better placed as well.
What about the portfolio mix with respect to different asset classes? Given the fact that equities, of course, are a risky asset class, and at times when investors do turn risk averse, how much of an exposure should one have to something like a gold or bonds in their portfolio, and how much of exposure should one have to equities now?
So right now we are still a little bit below the benchmark levels on the IT, so we can expect that to remain there for some more time because we are not in the clarity there whether the IT is going to re-rate or the equity is going to re-rate be below benchmark on the equity index basically because we are not having a clarity on the equity is going to re-rate immediately because it's going to operate in a range. But yes, one can expect the mid caps and small cap rally to continue for some more days because we are seeing some significant amount of SIP flows coming to the markets. That is going to drive the mid caps and small cap also. But it's already been kind of elevated in the space. The fund managers have been left with no option to buy into this elevated price as of now when the SIP is coming. So calls on cash is going to be a bit higher because many of the fund managers are also taking cash calls as of now because the valuations are elevated. So one can expect allocation to go more into the golds and bonds relatively because they are a bit from a risk adjusted point of view, they're relatively stable. So from a rate hike cycle point of view, we are not significantly very far off from the rate hike cycle because we are almost at the fag end of the rate hike. We cannot expect significant rate hikes coming from here on. That means to say that gold as an asset class may not significantly outperform also from here on. So you can expect the gold to taper off to a medium term. But yes, the currency depreciation can keep the Indian domestic gold price a bit elevated. Barring that, the international gold price is going to remain flat in the medium terms. Yeah, short-term volatility will always be there. The gold is a better adjusted class. Expectation is there when the gold as a relatively better risk-adjusted returns are being expected in the shorter term. But medium term, you can expect gold to also underperform. So ideally, the bonds and as well as because the yields are getting elevated, the bonds should be looking more attractive from the medium term perspective. Bonds as a asset class is going to look more attractive right now.
All right, and of course, we've seen the yields surge to 16-year highs in the US as well.
Correct.
But last question to you: you guys have recently launched the Shriram multi-asset allocation fund. So, give us an overview of the investment strategy of this fund.
Okay, so here we are looking at a quantamental investment approach, basically for selecting the stocks. So what we are trying to do here is identifying the price action and looking at the stock which are in momentum and having less low volatility. Basically, these are the primary factors that we bet on. Basically, low volatility is something that we are looking at because the markets are elevated. So we want the portfolio to remain less volatile, one. Second thing is we still need momentum because you need to identify stock which are trending positive. And at the same time, you want the valuation is a third factor that we have. So the valuation will ensure that you still try to relatively pick relatively cheaper stocks given this elevated valuation levels. So you need to identify stocks which are relatively cheaper, but still trending positive and as well as less volatile. That's the most important thing. So the fundamental approach is a combination of both quant and as well as fundamentals. So what we have taken is we look at these three-factor models. The stocks that come out of these three-factor models, we analyze them on a fundamental side. What are the quality? What are the financial background of these companies? What are the risk involved in these companies? So once you are convinced the stock are good enough to be going to the portfolio, we're going to add it to the portfolio. That's on the stock selection side. When it comes to the bond selection and bond side, we are looking at only the AAA rated government security bonds. We don't want to take any credit risk or any liquidity risk. So to that extent, we are going to stay invested in the short duration or the medium term duration maturity bonds on the bond side. When it comes to gold, we are taking the ETF route, and for the asset allocation, we are looking at the risk parity framework approach. What Ray Dalio has developed something similar to that. So we'll be using a covariance model where we look at minimizing the risk of different asset class in different volatility periods, and accordingly adjust the return so that you maximize the return. Basically, you take a relatively lesser risk and maximize the return. That will be the approach that we'll be taking there.
All right, Deepak, thanks a lot for taking out time and joining in and sharing your thoughts with us. Look forward to more conversations with you in the future.
Thank you. Thank you very much.
Well, with that, let me also bring on board our technical expert for today, Raja Venkatraman of Neotrader, joining in this morning. Good morning, Raja. Good to have you on the show as always. Friday morning cues looking extremely negative. Chances of this turning into a freaky Friday for the markets?
Yeah. So the way the market has been behaving, it's quite clear that there is some confusion at the higher levels, and that's what is prompting a steady supply at at every rally. So currently, at the way the market is poised, we are looking at a downward reaction right at the start. But then what we need to consider is that today is also the Fed meet, and that is what is triggering this reaction. So right at the morning, yes, there will be definitely a way down. There will be a gap down, sorry. And the gap down could offer us an opportunity to initiate long. I continue to remain on the long side. And I do feel that unless we have a closing below 19,300, we should not be looking at a bearish bias at the current juncture. Yes, there was a bearish moment, but not a bearish bias. Now, the key here continues to remain with Bank Nifty, as I find that Bank Nifty is holding higher levels at around 43,500. So as long as 43,500 is not vitiated in Bank Nifty, I would continue to remain on the buy side. And surprisingly, the PSU banks are leading the rally for the Bank Nifty. So as long as the trend continues to remain on the bullish side in PSU banks, Bank Nifty will continue to revive from lower levels. So overall, yes, today we could be offered a dip buy opportunity, and based on the time cycle studies which I'm doing, I find that today could be an opportunity to buy on dips.
All right, today could be an opportunity to buy on dips. With that, I want to straight away come to the stock of the day, Paytm. Reports suggest that Antfin is looking to sell somewhere around 3.5% stake via block deal, and the floor price has been set at 880 rupees, which is somewhere around 3% discount to its current price. Given the way the stock has been behaving, it has been on an upward trajectory. What kind of a strategy should one look at for Paytm today? And we have a couple of queries also trickling in on our feed. Debu K wants to know what should be the strategy on this stock for today. What would you advise him to do?
So when you talk about Paytm, right? Paytm has definitely shown some good positive move, and the steady block deals which are coming in. Like there are definitely some value being seen at lower levels. So this is a stock which we had discussed in our earlier show as well, and I find that the stock continues to find traction. But then the thing with this such stocks are that people who are entering this counter would also choose to exit at an appropriate moment, and that is something which is not known to the investor. Now, if you have an outlook of say maybe next 3 to 5 years, the stock can double from here. Now you need to have that kind of capital, and if you have, then this would be a good time to invest into Paytm.
All right, a good time to invest into Paytm, and of course we have seen some bullish views coming in from brokerages as well on the stock. Defense is another pocket that has of course been hogging the limelight, especially in the wake of the Chandrayaan's landing on the moon. And yesterday as well there was a bit of news flow that the Defense Acquisition Council has given its green signal to projects worth 7,800 crore rupees. We have a query coming in from Manj R and wants to know your thoughts on HAL and BEL. So what anyway, these stocks have seen a great sort of an up move coming in. Here on, where do you see some of these stocks like HAL, BEL, BDL, Astra Microwave on the charts now?
So when I take a look at all of these stocks have definitely shown some steady upward bias. Now, when you have to consider entering these counters, we need to see the kind of run which we have had in the last few days, and we are seeing right now that the market is undergoing a steady reaction. So at lower levels, these stocks should definitely be considered buying into, because from an overall perspective, I'm looking at the next month to show some semblance of a rebound from lower levels. And now it would not be a bad time to enter into these stocks.
All right, that's the view on the defense pack. Then we have a query coming in from Trilok. Wants to know the short-term view on TCS. Of course, so this stock has been stuck in a range. Raja, last 1 month hasn't really done much, and especially post earnings and especially post Infosys's guidance cut, the stock has given flattish kind of returns. But for the short term, how should one approach TCS now?
Yeah, when you look at the IT space overall, the traction has not been very positive for the leaders. But then the mid-cap ones are actually doing quite well. Like, for example, yesterday when we saw the move in Coforge, it was a very strong, aggressive move. So I have been mentioning in our earlier discussions that the second-tier IT stocks are the one to look at. So I would like to throw some light on, say, Coforge, Mindtree, LTTS, LTIM. So these are the ones which are definitely in the limelight, and I would look to play the IT space from these names.
All right, that's the view then on the IT space. Of course, Coforge was in news yesterday as well. Stock rallied over 10% after the big block deal that we saw in the counter yesterday. But let's also take up a query on Manappuram Finance. This query is coming in from Rajesh. Wants to know whether it's a good time to buy into Manappuram or not. What would you advise him to do?
Yeah, this stock has shown some good move in the last few days when the entire finance space saw a nice jump up. But what we need to consider is that currently the entire banking and financial space is undergoing some bit of correction. So every dip should be bought into. So currently at this moment, I would look for a lower levels around 128 to 130 to buy into the stock.
All right, that's the view on Manappuram then. But let's also take up a query on Lux Industries. This one is coming in from Rohit. Wants to know your thoughts on this particular stock. It has been trading at pre-COVID levels and not being able to break out. Of course, it has been stuck in a range over the last month or thereabouts. Do you see any traction in this stock in the medium term? That's what Rohit wants to know.
Yeah, so this counter has not shown much of promise, and after its strong move to the upside, I do find that there are challenges at higher levels. So what I would suggest is that hold on to the current position and use dips towards region of around 1300 to add into the stock, because the overall the counter has definitely some positive vibes, and I think that the stock can double in the next 1 year.
All right, Lux Industries can double in the next 1 year. That's the view. Hope that answers your query. We have a query coming in from Tariq Ahmed, wants to know whether it's a good time to enter into an IGL. This stock has been trying to make a comeback, but hasn't really been able to do that. Are we going to see further correction on the charts for this one, IGL?
Well, when I look at the overall prospect of this counter, I am not finding much of momentum here. And the reason has been that the current way the market has moved in the overall oil and gas space has not been very encouraging. Yes, it did have its brief run on the upside, but then what I'm finding is that a stock could slip into a range-bound action. So I would stay away from this counter. Rather, look at the oil marketing companies who have seen a very sharp reaction to the downside, and now they are showing signs of bottoming out. So, from the oil and gas space, if you are looking to participate, then I would definitely look at the setup of Hind Petro to initiate a long side.
All right, look at OMCs now rather than looking at something like an IGL. That's the view then. But I want to get in your thoughts on Bajaj Finance, Raja. There's been a brokerage view on the stock, positive view. Nomura has initiated coverage on the stock with the buy rating, target price at 8,700 rupees per share. It believes that the concerns are overdone and the business momentum will continue going forward. It has been consistently delivering strong numbers, and execution is something that will be key for re-rating of the stock. And fears over Jio Financial were overdone. That's what Nomura believes, and it expects the company to deliver AUM CAGR of somewhere around 27% over FY23 to FY26. If you look at the stock over the last 1 month, it has had a choppy ride, but on a 6-month basis, it has given a good 15% returns. Here on 8,000, how long on the charts?
Right. So Bajaj Finance definitely has been in the radar of all the broking houses, and they have been continuously tracking its growth. And what we can see here is a very roller coaster ride since the last 2 years. Since the last 2 years, it has had a fantastic roller coaster ride, and the higher levels around 8,000 have continued to remain a challenge for the stock. But lower levels are not being sold into. In fact, lower levels are being bought into. And even if you see here, this entire week, there has been some steady buying emerging at lower levels. And the kind of setups which are emerging clearly says that this time around, it could definitely challenge the higher levels around 8,000. So those who are looking to invest into this particular counter should definitely consider this as a good opportunity, because at the current moment, yes, what I truly believe is if resistance is challenged multiple times, then there will come a moment when this will be exceeded. And when you're looking at the upcoming seasons coming in, and the kind of financing which will be required, so overall it could experience a good Q2 as well, and the price action also is suggesting that we can expect a breakout above 8,000.
All right, expect to break out above 8,000 on Bajaj Finance pretty soon. But I also want to lastly get in your thoughts on Aurobindo. There are reports that the company is looking at selling its injectables business once again. Of course, it did make an attempt last year, but the kind of bids that came in didn't really meet its expectations. But it's attempting to do that once again. Look at the stock; it has been in a downtrend over the last couple of sessions. I think over the last 5 days, it has seen a 5% downtick, but it is pretty much close to its 52-week highs as well. How is this looking on the charts now?
Yeah, right. If the entire move in this counter since the entire year, it has really dribbled. And now when you take a look at the kind of sharp run which it has seen, there is a very high potential of some profit booking coming in. So I would not be a buyer in Aurobindo. If you are a trader, then you can definitely consider this stock on the short side, because lower levels are comfortable. Support levels are only emerging at around 750.
All right, that's the view on Aurobindo then. We're running out of time. Raja, what are your stock recommendations for our viewers this morning?
My stock recommendations for today, yes, markets are definitely showing some negative signs, but I continue to remain bullish. I would look to buy a low risk opportunity in Hind Petro. Hind Petro, I'll have a buy in Hind Petro at around 266 with a stop at around 263 for a move towards 273. And I would like to initiate a buy in PVR Inox at around 1738 with a stop at 1715 for a target towards 1775 and 1795.
All right, those are the stock recommendations coming in from Raja this morning. With that, Raja, thanks a lot for taking out time and joining in this morning. Wish you a good trading day and a very happy weekend as well.
Yeah, same to you. Bye.
Well, with that, we've come to the end of this edition of Morning Trade. From the entire team, thanks a lot for watching. But as usual, coming up next is opening bells, so don't go anywhere.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.